Welcome to chapter 2. Let's try and understand certain basic concepts now. You already know what stock market is. Stock market in today's world is nothing but a computer software which tries to match the buyers and sellers of shares of different company through a bidding price discovery mechanism. Oh, this is technical. So basically your neighbor wants to sell the shares and somebody out there might want to buy these shares. So your neighbor says that, hey, you know what, I gave you 5 lakh of rupees and you gave me 50,000 shares. So it is around 10 rupees. Now I want to sell these shares at 15 rupees, thereby making a profit of 5 rupees per share. So he goes on to the share market software, creates an account, logs in, and then he says, I have these shares of your company which I want to sell at 15 rupees. So he will wait till somebody comes and makes a buying bid for his shares. So if somebody makes a buying bid for 15 rupees, the bid will match and the transaction will go through. Now, if somebody makes a buying bid of 12 rupees, then it will not go through. If somebody makes a buying bid of 17 rupees, he will hit the jackpot because he is going to get the price at 15 rupees and save 2 rupees. So he got it cheaper than what he expected. Also, if there are already outstanding buying bids of these shares on the software outstanding, then your neighbor can see what is the price of this share currently in the market. And he may quote a near about price so that he can sell his shares and make whatever profit he is anticipating. Now add to this the layer of brokers. See, in olden days, where will your neighbor go to search for a buyer? So he would contact somebody called a stock broker, whose main business is to do what stock market does. Now, obviously, person who also wants to buy tells a broker that I am looking to buy shares. It's just like property brokers. You know, when you want to sell your house, you tell different brokers in your area. And if somebody wants to buy a house in a particular locality, he would also hunt down for a property broker in those areas. So in olden days, when there were no technologies, a broker would talk to a broker and then the deal would go through. Both the sides, they would pay brokerage individually to their own brokers. Now, the stock exchange has several registered members who are stock brokers. Each broker is given a particular license or a code. Now this code enables them to either put in buying bids or selling bids on behalf of the clients. So if your neighbor is a prospective seller, he would go to any of these famous stock brokers like HDFC, Kotak, ICICI, Sharekhan, Motilal Oswal, etc. And then he would open a broking account, and these days shares are held in DEMAT format. So what is DEMAT? DEMAT is a short form of dematerialized shares. Earlier, ownership of shares was indicated by a piece of paper called share certificate. Now this share certificate is digitized. So you don't have a piece of paper, but you have shares in an account called DEMAT account. So you will link your bank account, because when you sell shares you will receive money, with your DEMAT account with your broking account. Now when all these three are linked, it becomes very easy for you to buy or sell shares. So your neighbor will just inform his broker that he is looking to sell your company's shares at around 15 rupees, and the broker will execute the trade. Now you have many options. Technology enables you to call your relationship manager or place an order online on the broker's portal, and broker will in turn place it on the stock market portal. So technology has made share trading very, very simple and easy. It all happens with a click of a button. So now in this chapter, you have understood that how does a transaction in a stock market takes place. Taking the story further, you need to now understand that if you sell, or rather if your neighbor is selling the shares at 15 rupees, he may have to pay brokerage of, let's say, 1 rupee to the broker. Somebody who is buying will also have to pay his broker whatever brokerage is charged by him. So these two brokers will come on a common platform called stock exchange, and the selling broker will give shares and the buying brokers will give money. Stock market also does one very important function, is that it guarantees the counterparty settlement mechanism. Wow, again this is technical. In simple words, what if the buyer pays the money and the seller absconds with the money, does not give shares? Then the buyer is in trouble. What if seller gives shares and the buyer doesn't pay up? Then the seller is in trouble. But the moment the shares are listed on a stock exchange, this risk is eliminated, because in case either party defaults, then in that case the stock exchange will guarantee to honor the commitment of either the buyer or the seller, as the case may be. So you see that stock market creates a lot of liquidity for the stocks of famous companies. Now you may wonder, why am I saying famous companies? Because there is a very stringent criteria to get a company's shares listed on a stock exchange. And you have to understand that only shares which are listed on a stock exchange can be traded on a stock exchange. There are several smaller companies whose shares are not listed on a stock exchange, and hence they cannot be traded there. There are smaller exchanges or private parties which negotiate settlement, but then all that is very risky, because one, the company is not known; two, because the stock market is not in between, the counterparty settlement may or may not happen. So all that is very risky business, and after you buy the shares of such companies, you will not come to know what this company is doing, what kind of dividend you may receive in future, and in case if you want to get rid of the shares of such companies, what price you will get, where will you find the buyer, and what kind of profit you will make. So it is very important for any business owner, especially a large business owner, to make sure that eventually his shares are listed on a stock exchange. That would give investors a lot of confidence that this guy is genuine. He is filing his financial statements with the stock exchange every quarter. He is very transparent in the kind of business he is doing. His company's financial statements are audited by a recognized auditor who is independent, and based on auditor's opinion, whatever results are published are true and fair. Hence, the investors would get confidence, because there is separation of ownership from management. That means professionals would run the company and they are called board of directors, and also these auditors who are independent third parties will verify or keep a check on such board of directors to make sure that they are not cooking up the numbers and company is getting a true and fair view in terms of its financial statements. So friends, this was basic concept of stock market, and we went through a proper dry run of one transaction that flows into the stock market. I am looking forward to seeing you in the next chapter, where we learn how to invest more in detail.